With me today is Dr. Carolyn McClanahan. She is a medical doctor and also a CFP and also a good friend. Carolyn and I go back more than 20 years working together. We should get right into this really important session. We want to get to as many questions as possible. So please feel free to submit your questions for Carolyn, and we'll get to as many as we can. So Carolyn, as we brace ourselves for the third winter of COVID, many who have had COVID now are grappling with the ongoing related health and really key financial issues from long COVID, including insurance battles over treatment and disability. Yeah. So from our reporting from the PF team, we know that as many as 23 million people have been affected by COVID. And in addition, unfortunately, it's poised to have financial impact rivaling the Great Recession. The chronic illness now will cost the U.S. economy $3.7 trillion with extra medical costs, accounting for $528 billion. Yeah. Costs of a household scale are tough to quantify because of long COVID. So it's new, as we all know. So let's see if we can break down what financial advisors can do working with their clients to help work their way through these financial problems. So Carolyn, talk to me about long COVID and the treatment costs. There are some things I'd like to get into specifics, and we'll go through some point by point. But the key topics here are planning for and making disability claims, Social Security disability claims, also the impact of shortfall in cash flows, tax planning, and of course plans for loss of employment and employee-based health coverage. So Carolyn, let's start with the disability claims. What can advisors do now to work with their clients?
Right. No, with COVID, long COVID affecting so many people, and it's still not over, because the more often you get COVID, the higher your chance of getting long COVID. So we're far from being done with this, and we still don't know so much about it. And the problem when that client comes to you with long COVID, it's a hard diagnosis to make. It's called a diagnosis of exclusion. There's no official test you can give a person to say, I have long COVID. It's a clinical diagnosis. So people have to go through a number of doctors, and doctors hate when they can't fit something easily in a box, like when they can't do a test and say, oh, you have long COVID. And so it's very frustrating for doctors and your clients, because it takes forever to get a diagnosis, and then it takes forever to get a disability insurance claim approved. And so what do you do when you have that client and now they're facing potential disability for long COVID? Long COVID it's about having COVID for more than 12 weeks. That's the unofficial term for when it turns into long COVID. So as soon as that client shows up and says, I'm worried I have long COVID and I can't work, have them create a medical diary, starting from when they first got diagnosed, what symptoms they're having, a log of every doctor visit. And I know this sounds so time consuming, but by keeping excellent records and copy of your medical records, it's going to make it much easier. Well, it's going to be a long-term process, but it'll make it much easier to get a claim approved.
So Carolyn, if the client comes to you and they're saying they have fear of long COVID. Now, your situation is interesting because you're not just a certified financial planner, but you're a medical doctor. Right. I mean, are clients coming to you on both ends of that you're a doctor and a CFP? Like, and if so, what can a financial advisor who's not a medical doctor, like what kind of advice, should they be telling talking to their client about?
Yeah. So first off, I don't treat any of my clients as patients from a medical doctor perspective. But since I do have the medical background, we do attract a lot of people who have chronic illness issues and are serious health issues. And so long COVID goes into that basket of serious chronic issues that are really hard to deal with. And so we've had this problem before. We have it with chronic fatigue syndrome, with fibromyalgia. There's a lot of ill-defined illness out there that causes significant disability. And it takes a long time for the medical establishment to accept those diseases and to learn how to deal with them from a financial standpoint. So what should an advisor do? You're not a doctor, but when somebody comes to you and they say, I have this serious illness, learn what you need to do with chronic serious illness. It's just the same across the board for any of them. And long COVID, just the newest one in the basket. And so that is, you have to help them think through cash flow planning. If they're sick enough that they can't work, what can you do from a tax perspective to maybe use income out of an IRA to cover healthcare expenses, to making certain that say they're a business owner, if they've had income loss from it, that you're working with the accountant to pull income from other resources that they can use to meet cash flow needs. So the tax planning, making certain their estate planning is up to date and that they have all their power of attorney and healthcare surrogates named, because if the illness progresses, they may need help. So they need to have people lined up to help them. And then finally, the insurance thing is huge. You have not only dealing with helping them make disability claims, but if they lose employment and then they lose their employer-based coverage, now they have to decide, where am I going to get my health insurance? Is it going to be Medicaid or the Affordable Care Act? And as an advisor, you can do so much to save your clients money and time by helping them apply for these programs, learning how to manipulate their income so that they qualify for benefits.
So you talk about health insurance, but
Mm-hmm.
is life insurance also a big part of it? Are you, if a client comes to you, are you also telling them to maybe reassess their life insurance policy? These are tough questions because, maybe someone's younger that doesn't believe that, they think they have a longer life expectancy, but something also happens like this. Obviously, these are not easy conversations, but they're conversations that you have to have with your client.
Yeah. As an advisor, to me, one of the things advisors need to do from the very beginning, before anybody even thinks about getting sick, is to assess the need for disability insurance and life insurance. Because the problem with both of these insurances is if you're sick, then you may not be approved. And especially with long COVID, there's still a lot of unknowns out there. So the insurance companies don't know how to deal with it. So I say, if your whole entire client panel right now, you need to go through and make sure everybody has the appropriate insurance. And the good news, though, from a conversation perspective, is clients have seen what COVID can do to people. And now's a great opportunity to bring up, hey, we all know that bad things can happen. We just saw it with COVID. So it's a great opportunity to get them insured before they actually develop an illness. Now, once they develop an illness, all bets are off for life insurance, because if you actively have symptoms of COVID, you're not going to be turned down for approved for coverage until the symptoms are under control. And the way the insurers are breaking it down into, for long COVID, is it just vague symptoms that aren't going to kill you. Remember, life insurance is only pays out if you die. So if you have some disease that maybe causes you disability but isn't going to kill you, you'll still get the policy, but you'll probably be rated for premiums, which means they'll be higher. However, long COVID, it's this huge constellation of symptoms. It can affect your kidneys, affect your brain, affect your liver. And so if you've developed an end stage process, if it shows for sure that your kidneys, brain, or liver or blood stream is affected, they're not going to approve that life insurance for you.
So Carolyn, in terms of short-term, long-term disability, companies offer these different things. So does that also change the game plan for a client to get a different insurance coverage through their work?
Yes, absolutely. The beautiful thing about being employed is that during open enrollment, you can elect new benefits. Now, if you turn down disability originally, you may not have access to it. But fortunately, most good employers are providing disability insurance across the board, so it's not something you elect. But if you have the opportunity to elect it with short-term coverage, it also is an opportunity to, if you are developing an illness, go ahead and sign up for that short-term coverage if that's something you have to pay for, if there's no longer underwriting because you're a recurring, a continuing employee. But there is I usually don't recommend like critical illness coverage or all those little nice extra employee benefits. But if you get a serious illness, that's the time to say, maybe I should take that coverage because it will come into play and may help me. Also with life insurance, usually when you first become employed, you have to elect, they give you a certain amount of insurance, like 1 times base pay or 2 times base pay, and then you can buy extra. But they're usually, if you didn't elect that from the very beginning, they're going to require underwriting. So it doesn't hurt to try within a group policy, but if they allow you to buy additional insurance, go ahead and do that.
So, as a medical doctor, I don't want to put you on the spot, but some questions that have been raised through our extensive coverage on the PF team on this thing. There's a lot of misinformation out there. What are the chances of long COVID being considered a pre-existing condition? How hard is it going to be for an individual to prove an illness if they're going for Social Security disability? These are all things that I know are going to be concerned about people. We've got anecdotally people reached out to us after our reporting that said, I'm glad there's reporting out there. I feel like I was losing my mind. I'm not alone in this thing. So there's a lot of misinformation, a lot of just the unknown. So how can you work your way through that? As not as a trusted advisor, someone coming to you, but the medical field, where is it going? What direction is it going to go in?
Yeah, no, this is so sad because in medicine, people love definitive answers. Both doctors like definitive answers and patients like definitive answers. And unfortunately, some doctors aren't very kind about if they can't figure it out and you're coming to them with these vague, weird symptoms, they lose patients. And that's their issue. I mean, they need to get better training on how to have good bedside manner to deal with long-term chronic illness that's ill-defined. If you have one of those doctors, get a new doctor. There are a lot of doctors that do understand that these issues arise and they have compassion from the beginning, and they'll work with you to try to get you approved for disability, to try not only the regular disability insurance is easier to get approved for than Social Security. The problem with Social Security is you have to be proven that you're not going to be able to work for a year. That's why Social Security is so hard. And with long COVID, I mean, it's so new and we don't know how many people are still going to be sick after a year. I think the current stats are that about 29% of people with long COVID continue to have symptoms longer than a year, but it's so early. We don't know how that stat's going to hold up.
So we have a question. One of the attendees wants to know, Carolyn, if you can speak about the different options for long-term care insurance, LTC.
Yeah, with long-term care insurance, the big thing they look at is it's something that's going to cause you to need care from somebody else. So you have to lose two of the activities of daily living. So with long COVID, for most of the cases, you're not going to see that. It's going to not trigger a claim on long-term care insurance, but it can cause difference with underwriting and getting approved for long-term care insurance, just like it can life insurance and disability insurance. And so, traditional long-term care insurance, the underwriting is much more strict and you may be rated. And this is where if a person you want to try, if somebody is interested in long-term care insurance and they need long-term care insurance, you always want to have that conversation before anything ever happens. But once it's already happened, my recommendation is to talk to a good long-term care insurance agent, preferably somebody who is an independent agent that can look at all the different options from traditional long-term care to the hybrid life long-term care policies or hybrid annuity long-term care policies. Because the underwriting for those other sections, the hybrid policies, tends to not be as stringent as it is for traditional long-term care. So, the problem with long-term care is you should get it in your 50s or 60s, and most people aren't going to make a claim on it till their 80s. That's generally the biggest time when people claim. And so you don't know what it's going to look like 20 years from now. So it's a tough market because the policies that were sold in the 2000s were a great value, but they were underpriced. And now people are having to pay a heck of a lot more because they know they underpriced the insurance.
One of the things that we, and thank you for answering that question, by the way, appreciate it. And, again, please feel free to submit your questions as we get them. We're going to pass them right off.
I love questions. Yeah.
One of the things we were talking about was tax planning. So what, how important that is, and what are you doing? What should advisors be doing for clients from that angle?
Yeah. So when you're undergoing diagnosis for long COVID, they may run a ton of tests. And it also because so many doctors approach long COVID differently, you may end up having to go out of network for your care to actually get the care you need. And out of network costs are way higher than in network costs. And in fact, they can have no cap on some plans for out of network costs. And nothing breaks my heart more. Well, there are some things, but to see a tax return where somebody's had negative income. And so let's say somebody ended up spending $50,000 in healthcare expenses, and now they have huge deductions on their tax return, and nobody thought to take any income, let's say from an IRA or capital gains or doing a Roth conversion. So it's important when you have a client with a serious chronic illness or an acute illness that is causing a lot of expenditures, then make sure you maximize their income to take advantage of those deductions. The other thing that people forget is when somebody has a serious illness and they've hit their max out of pocket, that all medical care is free going forward for the entire family. So if you have other family members that need to have procedures done, or there's other things that they've neglected, make sure the other family members are making all their claims on the policy too. Everybody focuses on that individual who's sick and they forget to take care of themselves, and they don't realize, gosh, it could be free. I could get it all done. And so from the tax perspective, if you've reached all those great medical expenditures, none of it's great because you've been sick, but if you have these medical expenditures, then also don't forget like dental procedures, vision, hearing. So somebody needs hearing aids, that year that you can take all those deductions, get it all done. And then make sure you've created income against it. So do a good tax projection at the end of the year to make sure you've taken advantage of all of those deductions.
How far advanced are you working with a client on something like that? Because it's really that is so much more involved than an average, tax planning at the end of the year, tax loss harvesting and charitable giving. This is a completely different ballgame now, Carolyn. Yep. So, when should the client and the advisor be working together on that's so in depth?
Oh, absolutely. From the beginning, as soon as I mean, in fact, we have a number of people with serious chronic illness that, unfortunately, they are at risk of dying anytime soon. And so we actually do a tax plan at the beginning of the year to make sure they've done things like RMDs just in case something bad happens. And then mid-year to check where the medical expenses are. And then we do an extra distribution then. And then at the end of the year to wrap everything up to make sure we've maximized all the expenses. And it is labor intensive, but man, we have known each other a very long time. And one of the beautiful things I have seen that's happened in the financial planning profession is people have gotten a lot more serious about tax planning, because that's where you can provide the most alpha. And saving people thousands and thousands of dollars on taxes does not go unnoticed. And so I actually keep a triage list I'm a doctor, I always use that word, of what are the clients that are easy tax plans, what are middle of the road, and those hard tax plans, that's probably the third of our clients where we've got to do really in-depth tax planning. We just hop on it throughout the year.
You don't tell your clients you're doing triage on them, right?
Actually, kind of, but they appreciate it and they get it. They understand. And you've got to train the client though, because a lot of them don't understand the importance of what you're doing for them until they see the tax return after the fact.
Right.
When we've done a $50,000 tax-free Roth conversion to take advantage of medical expenses, it's like that money now you get that tax-free, and you would have had to pay 22% or 24% taxes on it. That's a lot of money. So they appreciate it.
So we have another question, Carolyn. They want to know, what's your preference for traditional or hybrid versions of long-term care insurance?
Gosh, because I've been around a long time, and I've been on back when they were selling great policies for a reasonable price, traditional policies, to now seeing people actually go on the claims and to see how the insurance companies are not always so nice in paying out the claims, and how you have to argue and keep resubmitting.
This is hard to believe. This is hard to believe.
I know. I mean, it's going to happen. And that's where, so for me, the beautiful thing about the hybrid policies, yes, the long-term care benefit is not as robust for dollar, but you have that bucket for long-term care. And once you go and don't do a reimbursement plan, do an indemnity type plan. Once you go on claim, they pay you a flat dollar amount every month, and that's the most beautiful. Yeah, but of course you don't get as big a bang for the buck for your dollar. So I'm more of a fan of a hybrid right now, only because the long-term care industry, they keep trying to figure out where to cut corners because they see it's a tsunami coming along with all the boomers aging, and people are going to need more and more long-term care. We're going to have some sort of legislation around it. Not long-term care alone is not going to fit the hole, so we can't count on that.
One of the a story that we did prior to everything with the long COVID was there was an increase. We saw an increase of people doing wills and estates during the pandemic. Is that something that you're seeing? Is that something you're working with clients on as well?
Well, again, I'm a big believer in preventive financial planning, like preventive medicine, right? And when a client comes to the door, if they don't have wills, power of attorney, healthcare surrogate, that's number one thing we make them get done. So you don't wait until there's an issue. And one thing we do with our estate plans is that we actually revisit it every year. We keep a nice little in our financial planning software, synopsis of what the documents say, who's going to get what, who's going to pick up if something bad happens. And every year we review that with the clients. It doesn't take that long. You print it out, you send it to them. Does anything need to change? And that way, if somebody needs to name a new healthcare surrogate or power of attorney, we get it done before poop hits the fan. I can't think of a better way to say it, but that has been invaluable when your client does get serious illness. And I just had a client this year diagnosed with glioblastoma, and it was such a blessing to the family. It's like everything's done. And we just reviewed it all to see if there's any last minute things we needed to do, and the family could concentrate on our care. So I encourage all advisors, don't wait, making certain that your clients have their estate planning documents done well, and that they followed through on titling, beneficiary changes, and all that. Make sure that everybody's doing that. And then when things happen, the family will love you. And you talk about intergenerational planning, where you want to keep that next generation of clients. When you've done something that beautiful for your clients, the family stays with you forever.
Great. Carolyn, we blew through a lot of stuff in a really, 20 minutes. It was, again, great insight. We really appreciate your time. Thank you for all the attendees for joining us.